All right, let's talk trading. If you've been at this for any amount of time, you know the double bottom pattern. It's classic. But what if I told you that the way most people trade it is, well, kind of broken, and that there's a way to level it up to avoid those infuriating false signals? Today, we're going to upgrade this pattern with a really powerful concept called the termination zone.
So first, let's just all get on the same page and talk about the problem. We've all been there, right? You see this beautiful, picture-perfect double bottom forming on the chart, and then it just completely blows up in your face. It's got to be one of the most common frustrations in all of trading.
I mean, seriously, does this sound familiar? You spot that second bottom, you get excited, you place your buy order. You put a nice, tight stop loss right below that support level, feeling pretty smart about it. And then, bam! The price dips just low enough to tag you out, and then, almost immediately, it rockets up without you. It's the worst feeling.
Look, this isn't just a string of bad luck. This thing has a name. It's called a stop hunt. This is where the big players in the market know exactly where everyone's stop-loss orders are clustered, and they push the price down just far enough to trigger them. They get to scoop up your position on the cheap, and you're just left watching from the sidelines. You know, the standard textbook approach tells us to just draw a line. We find that first bottom, we draw a perfect little horizontal line, and the second the price comes down and kisses that exact line again, we buy. But as we've just figured out, that kind of precision, well, it can actually be our biggest weakness.
And this really gets to the heart of the issue. A single razor-thin line is basically a tripwire. The slightest bit of market noise, the slightest dip below it, and boom, your trade is gone. It's just too rigid, it's too fragile, and honestly, it makes you a perfect target for those stop hunts.
So, how do we fix this? How do we outsmart the stop hunt? We have to evolve our thinking. We need to move away from this fragile line and start using something way more robust. So, it's time to introduce the solution. The termination zone. Think about it this way. Instead of that super sensitive tripwire, what if you add a safety net? You know, an actual area, a buffer, that could absorb all that volatility and market noise. A zone that shows you where support really is, not just where some line on a chart tells you it should be. I mean, when you put them side by side, the difference is just night and day, isn't it? The old way is a single, brittle point that's just waiting to be broken. The new way, the zone, is flexible, it's resilient, and it's designed specifically to handle that volatility that used to take you out of the trade.
Okay, this all sounds great in theory, but how do we actually put this thing on a chart? You're going to love this because it's incredibly simple. Let's just walk through the two-step process right now.
That's it, just two simple steps. First, you zoom in and find the one candle that made the absolute low of that first bottom. Got it? Okay, step two, you draw your zone. The top of your zone is the bottom of that candle's body, and the bottom of your zone is the very lowest tip of its wick. And that little box, that's your new, true area of support. So, you've got your zone drawn. This is where the magic really happens. We've built our safety net, but now we need to know the exact moment to jump in. And I'll tell you right now, this is the part that takes a little bit of discipline. And I'm serious about this. This part is absolutely crucial. Drawing the zone is the easy part. The real skill is waiting patiently for the market to give you the precise signal you're looking for. You can't jump the gun here. You have to let the price action prove to you that support is holding.
This right here, this is the golden rule of the whole strategy. I'm going to say it again just so it sinks in. You wait for a touch of the zone without a candle closing below it. A wick can stab down into the zone. That's totally fine. In fact, that's probably the stop hunt happening. But what matters is that the candle's body respects your zone.
So what does a valid signal look like? It's simple. Price dips into your zone, maybe it even pokes out the bottom for a second, but then by the time that candle closes, the body of the candle is back inside or above the zone. That's your confirmation. That's the market literally showing you, hey, we tried to push it lower, but the buyer stepped in right here and defended this area. That is your signal to get in.
Let's make this crystal clear so there's no confusion. Look at the left, a valid signal. The price wicks down into the zone, but the body closes back above the low. That's a go. That's your trade. Now look at the right, an invalid signal. The body of that candle closes firmly below your zone. What does that mean? It means support failed. You stay out. No trade. It's as simple as that. So let's bring it all home. Why does this matter so much? Because it directly solves all those problems we talked about at the beginning.
You're going to get way fewer of those premature stop-outs. The timing of your entries becomes so much more precise, and you can take these trades with so much more confidence, because you're not just guessing based on a line, you're reacting to what the market is actually doing inside a realistic zone of support.
When you really boil it all down, it all comes back to this one single powerful shift in your thinking, just moving from a one-dimensional line to a two-dimensional zone. That is the one change that makes this whole thing work so well.
So the next time you see a double bottom setting up on your chart, don't just reach for that line tool. Draw a zone, wait for that confirmation. Yeah, it takes a little more patience, but I promise you, this small change in your approach could be the exact edge you've been looking for in your trading.